Welcome to the Earnings Whisperers. I'm Dr. B.
I'm Benjamin Poole.
And today was, I'll tell you what, it was a lot of volatility in the markets, but in terms of trading the earnings, it wasn't as big as last week when we had, Google and Tesla and some of the bigger companies.
I think a lot of it has to do with Monday. The 5th was just insane.
Epic.
We had such a huge drop in the markets that I think people are a little bit scared of going into earnings because they didn't really know what to expect.
Yeah, I mean, really, that rocked the markets.
It
the
really
NASDAQ
did.
was down 6% pre-market. The S&P was down over 4%. I think it really caused a seismic change in the markets, and it really spooked people.
That's right.
We saw a lot of buyers buying the dip. The markets have rallied since then, but people have said, like, whoa, I got to step back here. I don't really want to trade or invest right now because it's too volatile. That's where we thrive. We actually love that.
However, during earnings, once you have that huge spike in the VIX and then this big drop, people are step back a little bit and they say, okay, maybe I'm a little bit more hesitant to get involved in these stocks at all-time lows or all-time highs or on these big bounces. And so a little bit of the volatility was sucked out of the earnings. Mm-hmm. However, next week, because the VIX dropped back down, should be good. But we're still going to go over the charts and kind of give you an idea of what happened in the earnings trader.
Let's take a look. Yeah, so last week we had a couple winners. This week we had one loser with Airbnb. I'll pull up that chart here so you can see. Now, this isn't one that we posted, but what we do is we post, let's say, 2 or 3 charts every day that we think are, where there's going to be a lot of volatility and the levels are going to hit. But if there's other stocks that are moving during that time, we trade them. You can see Airbnb here dropped around 15% on earnings. Again, you can see about 15%. And what I saw here is this little 1-minute bottoming tail. I like to trade on the 1 minute because it really gives me a good idea of what the price action is doing. So what I did is I entered here, I think right around either here or here. I entered. I had another add level right around here so that it missed. And then what occurred is the stock went up a little bit, right? So let's say our average is right here. Okay, stock went up a little bit, really never got back to our break even, and then you can see the volume just died out. So as soon as I saw the volume die out, I said, okay, I'm out. I'm just going to take a small loss here, and I'm glad I did because the stock really kind of went down over the next couple hours. This is probably just a fake print. That's why you're seeing that. This actually may have been real right here around 6 o'clock, but after the first 10, 15 minutes, if a stock doesn't rebound, okay, unlikely it will rebound.
So that's a good point. And this is one of the things that makes trading the morning's earnings a little bit more difficult because a lot of brokers allow you to go from like 8 a.m. until 8 p.m. And so if your broker doesn't allow you to go long or short to trade basically from 4 a.m. to 8 a.m., then there's not the volatility that you see in the aftermarket or after hours. And so, for example, Uber traded earnings, had earnings in the morning. And so here were our levels for the earnings trader. So our first target to the upside was 64.42. And let me show you what happened after the hours. So after the markets actually started moving, it wasn't until throughout the day that you saw Uber finally starting to move up, right? So earnings was here. This is about where it happened. The volume was super light. It did this little bit of a move up. And so some of our levels are tradable throughout the rest of the day as well. And so here was our first level, that 64.42 level. So it did hit and it pulled back a little bit. You would have been able to get out for a small profit. And then it comes back up. It hits our secondary level and has a much bigger pullback. And now we're looking at our third level. So this is still a valid level. If Uber gets up to $69.71, even though the earnings are already out, this is a solid level and you could still go short this. And these are some of the levels that we give you guys in the earnings trader that don't necessarily have to play out in the same earnings day. But the thing you need is volatility. You need the price action. And so that is what we look for our trades.
Yeah, good point, Ben. So again, this is the same chart on Uber. Like you said, a small profit there. And then again, you could have entered this intraday. This is around 9 o'clock at the open, 9:30. You could have entered this intraday and taken this short. What's the next stock? You know, SMCI was a stock that really nailed our level. Our first short level there was around 724. What did it say, Ben, on the website there?
I'm going to get that right now. Hold on 1 second. All right, so here is this is what the members got before earnings came out. So let me open this up, make it a little bit bigger. Okay, so the first level for a short on SMCI was 2706. And again, this is something that we give our members before the earnings come out. And on Tuesday and Thursday, we went live with our members. So this was given out. And here was our first entry, 530.84. And then second entry, 513.77. Third entry was 496.46. And then, Dr. B, show them what happened.
Yeah, this is amazing. So again, it's very tough on such a high-priced stock to get your line perfect here. But you can see this blue line, just like Ben had. This was our first entry short, okay? Our first short entry, all right? I actually didn't take the trade because I had my order right here. But there were people who did in the live trading room. And I think someone got in right around here, maybe 725, 727. It came up here to about 727.23. And then the stock fell from 727 all the way down to, what was the lows there, Ben? Maybe 540. So you're talking about, you know, close to $200 fall on SMCI after hours. I mean, this is just unbelievable. So I know one of our members got $90 per share on that short.
Okay, so that was your shortable level, but your first long level was 530.84. So what happened at $530.84?
Let's take a look. So, this is interesting, little wedge there. So 530.84?
Yep, 530.84.
All right, so right about there, right? Right about there.
Yes.
Let's bring that over.
And so that was your first long level. What could you have done if you had these trades ahead of time?
Wow, look at this.
Could you have taken this for another 20 bucks?
Absolutely. You know what? I would have taken this for a trade because check this out. Ben knows this from the 1 minute scalpel course. Boom, look at that wedge pattern. So you had the wedge pattern then fall and bounce on that support, okay, and you would have made 4% there. This happened on one of your calls last week or the week before. Same thing, it hit the short level and then hit the long or hit the long and then the short.
Okay, so now let's go back. Your secondary level was 513.77. What happened at 513.77?
Oh, you mean later on? You mean the following day?
513.77.
Let's take a look. I'll tell you what, I'm going to 513.77. So right in here. So it looks
Although
like
it would have pierced, right? It would have got down to basically 5, was that 505?
505, and then it moved up. Moved up to about 522 from this level. So there was probably another area over here of support where you could have added, right? So your first entry would have been, again, right here, and then you probably would have added maybe on this bottoming tail here, your average would be here, and then when the stock rallied, you could have either taken profits up in this area or waited to take profits up in these areas. So.
But let's say that you didn't add. You only got in where Dr. B said to enter on this secondary trade. You already took the first one for the short, and then you went long, and then you got in this one. You would have been out of the money about $10. That's okay because on earnings you go smaller. You would have been able to ride that and get out with a profit. Now, third level, 496.46. What happened there?
Man, you didn't tell me that all these levels hit here, Ben. This is pretty cool. 496.
496.46.
46. 496. 46. Same exact thing happened. Hit that level, came down a little bit, bounced around it, and then moved up higher for another, what, almost $10?
So
$8?
basically these levels, like I was saying with the Uber, these are solid levels. We give you these levels because we've done our research on them. They have dual factors. They're not all going to win, but oftentimes they do win, and you can make some pretty good money on earnings. And so that's just a couple of the trades. What else did we have? There were a lot of other trades like like Rivian. Rivian just didn't have the volatility. It was implied volatility was really high. And so we take that into consideration when we're giving out our levels. It didn't actually hit. We had stocks like Disney that we gave the levels. Unfortunately, it didn't move in our direction, and so we didn't actually take the trade, and neither could our members have. Shopify was one that we gave out the levels. So here was intraday. It moved up. The thing with trading anything is you need the volatility, you need the price action. If there's no volume in it, it has a tendency to float, or if it's going down, it has a tendency to keep going down. So you need volume in order for you to see a reversal. And so here we have our first level, second level, third level. Let's say you got in on our first level and then your second level was an add, third level was an add. Your average would have been about right here. You could have gotten out right at this 62.86 level for a pretty sizable gain. And again, these are earnings trades, so you're going to go a little bit smaller with your share sizes. You would have gotten out with a profit. And just another one that we gave you guys gave in the service that was one that worked out. Not a lot of them go against us because our levels are so good, or we stay away from them if they're too crazy of volatility. Because we don't want to get stuck in a trade.
Yeah, our levels are, it's not that they're so good, and hopefully they are, maybe they are, and so far they have been, but I think they're safe, right? They're safer levels where, we look at the implied volatility, we have somewhat of a calculation for how we do this. We look at charts, hundreds, thousands of charts per week, per month, so we understand where the pullback is likely to be based on technical analysis, and we try to put those levels conservative so that if it hits, it's likely to really make a move. So good, Ben. So we've talked about some of the earnings this week. We've talked about our loser we had, a potential winner with SMCI several times that we could have traded. Let's talk about next week. So there's not too many earnings next week. In terms of like the big Mag 7. Most of the Mag 7 have already reported. However, check this stock out. This is a stock we tend to trade quite a bit. This is AMAT here. You can see AMAT is has fallen significantly from about $250 down to about $172, and now rebounded into the 190s. So anytime that you have a stock that falls like this, there is a propensity for the stock to go up on earnings. However, with the one caveat being that if the stock has rallied from down here up to there, this may just be the beginning of the fall, and it could, obviously go lower. So I see a couple trend lines here. There's this trend line that the stock bounced on perfectly. That's an amazing level there. I also see this area right here as a potential level. If we come back down to this, probably bounce right in there. And then in terms of on the short side, we have these pivot highs. There's probably a fib level here. If you take this level to this level, there's probably a fib level right in this area. So I'd probably be shorting in there. And again, we'll have these charts posted early next week.
That's right.
So what do you think, Ben? Any big earnings you see for next week?
Well, a couple that I'm going to look at is definitely NU. I'm going to look at that. SEA and Home Depot. The Home Depot is going to give us an understanding of what's going on with the consumer. SEA, it's another one that usually does pretty well with technical levels, so I'm definitely looking at that. Let's see, Stone is another one, and then let's see, Walmart, and then John Deere.
Yeah.
So those are the ones that we're kind of keeping our eye on. We will have additional additional charts for you guys as well, and we'll go over these again.
Awesome.
On next Friday, right?
Yeah. It was a full episode, a full week. The past few weeks have been a lot of fun.
Yes, that's
we've
right.
We've had 1 or 2 losers, but mostly winners. And a lot of our members from the Apex Day Trading Room are coming over to trade with us during the earnings.
Because it's quick, in and out in minutes sometimes.
It's quick, it's fun, and there's science to it.
Yep.
So
awesome.
Well, hey, thanks for tuning in, and we will see you next week.
Yep. Take care.
Take care.